Yeah, so today is going to be capital efficiency. So the reality is, the last couple of weeks we've been talking about the stability of a company. We talked about the dividend history. We talked about management. And one of the questions I actually has posed to me this past week in Lounge was, how do you really look at a company's management to see if they're doing well, if they're if all their processes are efficient and those kinds of things. And this is one of the many, there's many ways obviously, but this is one of the, I think, the best ways to kind of see really what a company management team is able to do with what they're presented with in the business. So capital efficiency is just basically the ratio of the output to the amount of capital that it takes to either make a product or service a project, if you will. So what that means in layman's terms is, okay, how much do I got to put in to get my product out, and then how much can I sell that product for, essentially. So it's kind of the little bit of a process there. Now, you might ask yourself, why does this matter? Well, it matters in a big way, because let's say you've got a product that isn't specifically profitable at this point. And maybe it's just starting new, maybe it's brand new, like Tesla was a number of years ago, right? When they first started, they were losing money on their cars, right? Because their processes weren't streamlined, but yet they had a good enough team and a good enough business model where they were able to streamline it, and now they're able to make those things profitable. So this capital efficiency metric, if you will, it works both for a value company, and it works for a growth company as well. But we're going to look at the metric a little bit differently. So again, why does it matter? Well, it matters because we can see, by looking at this capital efficiency metric, we can see whether something's, maybe it's just starting out and there's a lot of capital cost to it. But we can actually see if those capital costs are starting to come down. And if they are, that's a good sign that management either has a way of streamlining the process, or maybe it's just the whole process in the beginning, had an avenue to be streamlined. So it's very important that we see that management can handle these types of things. It also can present red flags. If you start to see that capital efficiency is falling off, that can be problematic, especially if you've got an established company. Now, if you've got a growth company, that metric's going to be a little bit different, but I'll explain that in 1 minute. So the other part of that is if your capital efficiency is falling off, and I'll tell you how we find that out in a minute. If it's falling off, that might be a problem with the product. It might be a problem with the process. It might be just an obsolete product, where the management team then has to pivot from one product to another, or one project to another project, right? And so basically, it's how good is management directing the capital of the company to produce profits. That's essentially what it is and what it comes down to. So capital efficiency, when we look at our capital expenditures, capital efficiency is basically just capital expenditures, how much money they're putting out to how much they give back to shareholders in both dividends and buybacks. Now you'll probably be asking, well, why? How does that matter if they give money back to dividends or they buy their shares back? Well, it matters because what it shows is that the management team values shareholder value in the stock itself, right? They want to reward their shareholders. So what it tells me is, when I look at those two metrics, and I'm going to show you how to see that, in actual numbers here. When I look at that capital expended versus the amount that they're willing to spend on the dividends and the buybacks, that tells me that the management has a certain efficiency to it, to the way they direct their capital. And that is when you start thinking about stability, that's a really great metric to kind of keep in mind. It's not specifically an exact quantifiable number, but we can compare two things to get an overall picture. So when we start to do the growth thing, we can actually see the trend. We're traders here. We all look at trends. We can actually see a trend of the capital expenditures, and that could tell us a lot of stuff too. So one of the reasons that I bring this to the table today is Warren Buffett, and everybody knows who he is. He's a guy that I try to learn from and model after. He has 4 core values that he looks at fundamentally. Okay, and they are as follows in order of importance. Okay, number 1 is type of business. Okay, he has a way of looking and saying, okay, if I can't understand what a business does, how can I really be, sure that it's going to do well in the future? So type of business is number one. Number two, management of the business. Okay, that's number two on the list of the four that I'm going to give you today. Management is key. And this metric is a way to see how efficient that management is. And if it's not efficient, then, if you're Warren Buffett and you're buying these companies, you can change out the management. But if you're a shareholder, that's going to give you a reason to say, okay, maybe I need to reevaluate my position in this particular stock, or maybe I don't want to get as involved with that particular company. So management is very important. Thirdly, for Buffett, it's financial measures. And fourthly, it's value. It's the price of something. It's what you pay to what you get. So you'll notice that the second one in that list is management. He knows that great management can make lots of profits and poor management can kill lots of profits. Okay. So we want to make sure that we look at these things just so that we know, okay, really how efficient are these companies? And we can compare companies to companies, but we can also compare companies just to itself. Okay. So remember, he's willing to pay a little bit more. His philosophy is, buy a great business at a fair price, right? Not a great business at a cheap price, at a fair price. So value becomes kind of fourth on his list. That management is oh so important. So the way that we can see this kind of stuff is if I go to Yahoo Finance here, all right, you guys will be able to see this. If I go to Yahoo Finance here and I put in Coca-Cola, we've been using this example all the way along, but you just go basically, there's a little box here that says quote lookup. You just throw in whatever stock you want. And then it gives us all these choices here. I like to go to financials. This is going to give me the most information that I need from a fundamental standpoint. There are other areas that we can look at, but this one's pretty good. So when I get into here, I've got three choices essentially, and this is just your basic accounting. Got an income statement, a balance sheet, and a cash flow. If I go to the cash flow tab here, okay, and I scroll down, what you're going to see is down here, if I scroll all the way down, you're going to see where it says capital expenditure. Okay. Now this is going from, I believe it's 2018 until current time, trailing 12 months. So what we can see here is they spent 1.347 billion in 2018, 2.54 billion in 2019, and then it dropped back down to 1.177 when the trailing 12 months 1.146. So you can see that overall, with the exception of 1 year here, that their capital expenditures are kind of dropping off. So that's one side of the equation. What's the other side of the equation? How are they spending that? They're putting out that capital. How are they rewarding the shareholders, or how are they managing the rest of that money? Well, if we go back up to here, where are we here? Common stock repurchased. Okay, so you can see that they buy common stock, right? They buy some back. Now, this is actually falling off, so they're buying less stock. That's fine. Okay, but look at their dividends. Okay, they're continuing to reward shareholders over and over again. And these folks are in the billions. These numbers are in the billions, by the way. So if we look at this, right now, they're spending almost at least say 8 times the amount to reward the shareholders as they are to run the business itself. So imagine, if you took all this capital and realized how much they were making, this is where they're spending their money. This makes this a very capital efficient business. They're able to reward their shareholders and still spend money to keep the business creating profits. Okay, and we can look at this. We can compare this to a similar business. We can see how efficient Pepsi is. We can go to the cash flow statement here. We can see that capital expenditures. So it was 3.2 up to 4.2, stayed at 4.4 or 4.2, and then popped up to 4.4. So Pepsi in this particular case is spending more on their capital expenditures instead of it dropping down. Now, is that the only thing you can look at? Absolutely not. We got to see what else they're doing, right? So we go back up and we look at so they bought back some stock. They're keeping their dividends. Yeah, they're increasing it each year. So that's healthy too. But if we kind of looked at that metric, and we could say that, okay, a lot more money is going to Pepsi to produce these products. Now, the one-off that you have to understand, and it may require some deeper thought, is that metric that we had for Coca-Cola, that was an uptick in that year. That could be a new project. So that might be something you have to go to the the investor website and check that out to see why that is. But when you have a trend like this, it kind of gives you an indication of how the company is managing their capital. And that's a very important metric when you add that to, the history of dividends and all the other stability measures that we talk about. That's one of the important ones because it tells us how efficient the management is. And for me and Mr. Buffett, that is top of the list for me when it comes to figuring out fundamentally whether I'm happy with the stock's performance.